Hello family, welcome back to the channel. It's your boy E, the Dividend Passport Bro, back with another video. Guys, today is Sunday, February the 2nd, 2025. If you're not working on yourself and getting yourself together, that's your goddamn business, because life is not going to sit there and wait for you. Okay guys, I talk about this every single day. Invest in your future. When I talk about investing in your future, I just don't mean invest in the stock market. Invest in yourself. Okay, educate yourself. That's an investment into yourself. People go to school to pay all this money in the university. What do you think that is? That's an investment, because they do that so that later on they can get themselves into a better situation, a better job. Okay, so let's get this party started. Guys, welcome to the channel. Okay, the new subscribers, welcome to the channel. We are about on our way to 3,000 subs. Right now we have 2,100 plus subscribers and counting, guys. I appreciate the love. I appreciate the confidence you show in me by subscribing to this channel and listen to me share my portfolio with you and my thought process every single day. Okay guys, and as always, this is not financial advice. This is just me sharing my portfolio and my thoughts. And at some point we're going to bring other people on to share their portfolio and their thoughts on investing and how similar strategy can get you to the next level. Now, like I always say, if you're here because you're waiting for something to go wrong and me losing my money, well, you're gonna be around for a while, right? If you're here to learn to invest in the stock market, you're in the right place, because we don't want to just invest in higher yield, extreme, as I call them, extreme high yield dividends. We also invest in Dividend Kings and Dividend Aristocrats, right? Now you can be like, Edwin, what are Dividend Kings? Are they guys that, you know, they're kings that wear the big crowns and stuff? No. Dividend Kings are a company that part of the S&P 500 that have been paying dividend consecutively for 50 plus years, and they increase their dividend every single year. This is why they call them the Dividend King, right? And he's like, well, what about them Dividend Aristocrats? Are those guys like causing problems and stuff? No. The Dividend Aristocrats company, also part of S&P 500, have been increasing the dividend and paying dividend for 25 years, right? Not over 25, but 25 years. So if you're part of that group, you are part of the elite of the S&P 500. Okay, S&P 500 companies that pretty much it says for itself. Okay, so if any one of those companies, if you have any one of those companies in your portfolio, that's kind of like a set it and forget it, because they've been doing that for 25 years, 50 years. I'm 51, soon to be 52, right? In about how many days there? 9 days here, I'll be 52 years old. And thanks to investing in high yield, thanks to investing in real estate, thanks to investing in low yield, I got 1M in my bank account. Well, I won't say in my bank account because I don't have $1 million in my bank account, but totally combined, I am valued. Let's talk about evaluation all the time. Evaluation. My evaluation is over $1 million. Okay, I'll show that to you guys in previous videos. Okay, I show you my tracker. Okay, my empowered tracker. I show that to you guys. And the next time you guys gonna see the tracker when we get to 2 million. Okay guys, that's the next time you're gonna see the tracker. So every time we add another M to my portfolio, I'm gonna show the tracker. Okay, like I said, we're here to motivate, and if I say something that will offend you, then you're in the wrong place, because that means you don't have the right mindset. You need to be somewhere else for sure. If what I do here does not motivate you but instead offend you, then get to stepping. We don't need you here. We are all about positivity on this channel. Positivity, positivity, positivity. That's it. I talk about that every single day because I want you guys to pass that message, spread that message, okay? Help your friends and family. If they don't want to listen to you, then you say, you know what, go watch this guy, because this is what he does and it's working for him. Okay? And I'm not only just doing one strategy, I'm doing multiple strategies combined to one, okay, that is working perfectly. Now people say, oh man, that dude is crazy. I'm crazy about my money, because without that, I'll just be another poor black man struggling. Okay, but with money come power and opportunity. Now you can use that for good or bad. For me, I'm using it to build a future for my family, for my girls. Okay, one day God gave me a son, but for now I'm building a future for my girls. So they don't have to take no crap from nobody. Okay, they're going to be financially set, and they can live a good, peaceful, and fruitful life. All right, enough of the yapping, guys. Let's get back to this, okay? As I was saying, right? Investing is a lot of different things, okay? But how do you know if you're doing the right thing if you've never done it before? You know, there's a lot of people on the internet that talk about investing in different ways, in different forms. But the bottom line, right? The core concept. What are you investing in on the Dividend Kings, Dividend Aristocrats, or you know, Apple or Google, whatever? What are you investing in those companies? How do you do your research? How do you decide, you know what, I want to buy this company? Do you buy the company because of the P&E? Do you buy the company because you like them? I use iPhones, right? I got a Tesla. So if I use those products and I like the product, so why not put my money into the product? Because I'm buying them every year or every 2 or 3 years, right? Why not put my money there to where I own a small portion of that company? Right, when you put your money into the stock market, right, you put your money into that company, you own a small portion of that company. Now, the people can say, oh, well, you know, this is just a payment to play, whatever the agreement that people call it, right? But you own a portion of that company, right? And sometimes those companies go bankrupt. It happens, okay? But you're going to see the signs. There's going to be signs. It's very rare when somebody just accept that they're like doing scamming and stuff like that, and just going to boom, that's going to fall out and everything, the bottom fall out to say, and then everything come out, okay? But it's very rare when that happens, because there's people out there looking to these companies every single day to make sure they're doing the right thing. Now, don't get me wrong, crap happens. You guys know that stuff happens, but you got to educate yourself and do what you need to do that best for you. Now, I talk about investing every day. I show my portfolio every single day. And why do I do that? Because, like I say, to motivate people. Now, I'm gonna go ahead and show you guys my portfolio here. Now, this is my new portfolio, okay? Now, this portfolio, I have a bunch of other portfolios in other smaller accounts, smaller application, smaller companies that do provide platform to trade, okay? For different reasons, whether they're offering specials and stuff that I signed up just to get that special. So I have accounts in different places. But this new account here, this is going to be my account that I'm going to live off of, right? And the reason I say that, because this account does not have margins. So all of the money that I make from this account, I don't have to worry about margin calls, okay? So people are like, oh, Edwin, what is margins? I'm just going to make it in layman terms, okay? So when you borrow money, so you have an account, right? And you can get a margin, so that they would give you sometimes 50%, 60%, it just depends, whatever, 100%, whatever it is. They will give you almost kind of like a loan. They will give you money that you can use to invest, right? I don't recommend this for new investors, because even me have a problem with it, and I've been doing this for almost 5 years, okay? So they will give you money to invest, right? You take that money and invest. It's kind of getting a loan to buy a house, right? So they give you money to invest based on what you already have in your account. So let's say I have $6,000 in the account. If I was to turn on margins, they're going to give me an additional $5,000 or $6,000 to invest. So now, instead of me having $6,800 in my account, I would have 13,000 plus in the account. You know, that's in essence, that's what it is. If you want to know more about it, look it up on the internet. It's on there. Everything is on the internet. And you can come by and say, Edwin, you were wrong. You missed this one part. But the point here is to talk to people who does not understand, right? People who have no idea what I'm talking about. People who never invested before, who sitting here looking at this and say, what the hell is he talking about? You know, he's talking about this thing and this thing. It doesn't make sense. The goal is to make it make sense, right? And make it make sense so where it's very easy for you to understand and very easy for you to get into. I talk about Dividend Kings and Dividend Aristocrats. So those companies, some of them are going to pay up to 7%, 5, 6%. So if you're starting off new, my recommendation is not financial advice, but my recommendation would start with the Dividend Kings and Dividend Aristocrats, you can look in there and see which company pay monthly. Usually those companies pay quarterly because they're big companies, right? They pay quarterly, and you can get 10 of those, right? If you have 10 of those companies, and if they're paying you, if they're paying quarterly, if each one of those companies is paying you, $100, $200, $300 a month, you do the math, right? Based on what you need to pay your bill. It might take 1 year, 2 year, 3 or 4 year, 5 years. It might take up to 10 years to get that money to where it need to be. Now, when it comes to investing in dividend, it's very slow, it's not sexy, it takes time. So just come in the high, extreme high yield, as I call them, that paying 100+% yield, 90, 80% yield. Now, this is what I talk about Robin Hood method, right? That's come from the old ancient movie, not ancient, but ancient movie, right? From England, the Robin Hood, the same name that the current platform Robin Hood have, right? From that movie, that he goes and rob the king farm, king's land, take stuff from the king's people, and take it back, and give it to the poor people. In essence, we're gonna take those. We're gonna do using the same strategy. We're gonna invest into the extreme high yield, some high yield, somewhere in between there, some safeguard stuff, right? And then put in some lower yields. The goal is the high yield is gonna bring in the income immediately, right? So if I put 10,000, I'm gonna get about $1,000 estimated, right, a month from my extreme high yield. Now, the goal is to build the extreme high yield to, let's say if I need $3,000 a month to live, right? So the goal would be to get, for me, I recommend, my financial advice would be to get that money to 3 times what you need, right? So he said, Edwin, but why would I want to get the money to 3 times what I need, but I only need $3,000? So that means you're going to be getting 9. But guess what? You still got your safeguard, your funds, your portfolio. Now you got to look at those extreme high yield and look at those Dividend Kings and Dividend Aristocrats that you put together as a core position. When I say core position, those are the positions no matter what happened, they're going to pay you dividend and you're going to be fine. Okay? So you need $3,000. So you got 10 positions. You need each one of those positions paying you about $300 a month. Okay? So $300 a month, if they're paying quarterly, they're going to be paying $900 every quarter. Now, it's based on the cost of the share, based on the cost of the positions and the share, some of those can be very expensive. Each one of those positions, getting them to paying you that amount of money can be expensive. If some of them is $50, $70, $80, and you need to get, and they're paying, what, 5%, 3%, they're going to take a long time to build that. But in the meantime, between time, you still have $9,000 coming in. You can take 3 to live off of, and you got 6 left. So out of that 6, you can reinvest maybe, I would say 5 or for another 4,000, and keep another 2,000 into another account for emergencies, right? Another high yield, maybe generating 4 or 5%. You just set it there and forget it, and let it, and you keep adding to that every month, to where eventually you're gonna have 3 to 6 months, maybe a year worth of cost of living, right? Now, in the meantime, that high yield is still generating income to where you can take that money and continue to invest, pay your bills, put that into your lower yield, and at some point, I don't know how long it will take, right? This depends how much money you're investing. Those safe Dividend Kings and Dividend Aristocrats will be at the point where they're going to be generating you $3,000 or $4,000 a month. Okay? Now, when you got that Dividend Aristocrats generating you that much money, that matches what you need to live off of, you still have your high yield generating you by this time probably maybe $20,000 a month. Okay, so you're going to keep pumping money into your safer positions, right? And grow those positions. They're probably never going to get to the point of the extreme high yield because of the yield, the income you're getting. But at some point you can get it to 5,000, 6,000. And when you get to that point, do you say, okay, now I'm here, I'm going to stop? No, why would you stop? You continue to invest, right? You use the strategy until you can use it no more. You help people, other people. You teach other people how to do it. Or point, you know what? If you're not a teacher, I'm not a teacher either, but I try to explain stuff the best way I can. like for people to understand it, the very basic, because for me that will work in my career, making people understand things if I was talking to like a kid. Because some things, no matter how simple it might seem to you, it might be a completely complicated to other people. You know, I talk to different people every day. Some of my friends, some of my family, and sometimes, the simplest thing. These are smart people, engineers, lawyers, doctors, but the smallest thing, they can compute that, right? So you have to make it make sense. You know, so the first process is you have to open your account, fund your account. Second process, and the third process is buying a position. So people say, well, you can start out by buying what you like. I say go to the Dividend Kings, Dividend Aristocrats, find, take 10, 15 positions out of there, or 20 or 30, whatever. Looking at the rate, right, the return, put them into your portfolio. Okay? You can go by sectors, what sector you like. For me, I said look at the yield. I'm starting from the highest yield and go to the lowest yield between the two. So between the two, you might be able to get 10 positions, and that will bring you maybe 5% yield. And then we have AGNC, we have a bunch of REITs, we have MO, we have this bunch of companies out there. I can't think of all of them off the top of my head. JEPI, JEPQ, those are companies that are in the 7-8%, some of them in the 9%. But you add a few of those, and before you know it, apart from those extreme high yield, right? You're gonna be building something good. Then we got Curve, the new, it's not new, but I just started investing that last year, right? And so far they don't have any NAV erosion, right? It's to where your principal is depleted over time because the company paid too much in dividend. Okay, so we investing in those also to grow the portfolio, guys. This is a long-term goal. Okay, so I was talking about margins and stuff. So let me go back over here. I know I'd mentioned it before, right? I was talking about selling my my crypto in here, and the reason being is when I sold some of the crypto, I did take some money and buy some more crypto. But when I bought some more crypto, I use, because my account is margin, so if I use money to buy something, automatically that count towards my margins balance. Okay, and I don't want to, the way crypto go up and down, it can affect my portfolio. Like now, I have $1,000 in my portfolio, but because crypto took a nosedive, right? My portfolio is down $800, and guess what is affecting my margins, right? And luckily, I have money in my account I can throw in here if I get a margin call. But I'm still good for now, and hopefully I'll be fine next week until we get paid some more money in the account. I try to be very transparent with you guys because I don't want you guys to have the same issue. That's why I'm saying, if you are new to this, do not use margins. Learn the process. Learn, because things change all the time. So if you put your money in the wrong place or in the wrong thing, it can cost you thousands of dollars, right? And you don't want to get jaded, because when you get jaded, then guess what? You're going to be like, oh, I'm not going to do this. It's a scam. Then you start thinking like the rest of the people, right? That, oh, it's not for me. I'm the wrong color. All this kind of stuff. People do that. I'm just being straightforward. I'm just being very transparent. Okay? Because I don't want you guys to make the same mistake. If I had to do it over again, I wouldn't have used margins to invest. But that I can take that back. I can only pay out the margins, and it's going to take time. As I build my portfolio, because I'm trying to get my portfolio to 60 grand, eventually to $100,000 a month. As I build my portfolio, guess what I'm doing though? I'm still building my core positions, right? And the core positions is less, is the yield are less, but I'm still using money for margins because it's in the margin account. But am I worried about that? No, because I need to get those positions to a certain level, right? And they kind of help because they don't lose their value at some point. But the only difference is we're not getting the money that we get from the extreme high yield, but the extreme high yield do suffer from NAV erosion. Okay, so you have to put things in your portfolio to balance out your portfolio. Don't just do the high yield. Do not. It's a bad idea, because when stuff happens, when they go down, I was lucky because I had my portfolio built especially my Fidelity portfolio, I had over 160 some positions in my Fidelity portfolio, which I'm selling now. Some of those positions that have 2-3% yield, under 4% yield, except for SCHD. I'm not selling SCHD. But I'm selling some of those positions so I can put back into the portfolio. And because I have so many of those, right, and I'm trying to bring my position under 100, and at some point I'm bringing it under 70, under 70. But for now, I'm trying to bring them under 100, right, to 100 this year. That's the goal, to bring them to 100. I think I still have like 155 positions in my Fidelity portfolio. Okay, and the high yield, mid high yield, and then low yield, like the 1-2%, super 2%ers. Now, there's some positions that pay dividend, like Costco's, is in my growth portfolio. My growth portfolio is just positions that don't really pay dividend or pay very little dividend, but have a bigger room for growth, right? So I put those in there, like Nvidia. I just mentioned Costco, Microsoft. Those companies are in my growth portfolio, even though some of them pay dividend, but a very little dividend. Now, I don't want to confuse you guys. I'm trying to keep this to a point where you can understand. Stay away from margins if you're new. Margins can help you grow your portfolio if you don't need to use the money right away. Because if you need to use the money, it will still grow your portfolio, but then you have to have a buffer of $20,000-$30,000 in there, so where you can pull money out. And when you pull money out, I think Fidelity does the same thing, almost like getting a loan from your own money, and they're gonna charge you interest again on that money because it's coming from a margin portfolio. Okay, guys. So I'm trying. I know I'm jumping around, but I'm trying to give a lot of information that will help. Okay. So if we go back over here, right, you see my chart swap, my Charlie swap. Okay, this is gonna be my live off portfolio. My card note come out of here right now. When I get my other cards that I'm gonna buy, one or two, maybe one, I might get another car for my daughter. But when I get my other car, when I get back home at some point, back to the U.S., right, that payment is gonna be coming out of this account. Right, I will move money from here to the other account. But for now, that payment can come from my Fidelity account, from my daughter's account. Right, I'm using my daughter's account to move money to build all of these accounts, but mostly her account to get it up to $20,000+ a month, because her tuition is $20,000+ a year. So if I can generate $20,000+ a month in their account, which is this account, right? If I can generate $1,000+ a month in this account, 20,000, not 1,000+, 20,000. Okay, that's great, because the goal, we're getting there. As you can see, it's a new month, so we gotta wait for the dividends to start coming in and see how it's gonna adjust, right? But now we're at 10, we're trying to double this to get it to 20. So in order to get this to 20, we have to invest maybe another 50,000. Another 50,000 will give us 200,000, because right now we're above 100, right? So we invest another 100,000 into this portfolio. Now we'll have over 200,000, but half of that will be margins that the bank, Robinhood, give me to reinvest and then make money. So now when I'm making $20,000 a month plus, I can say, okay, well, I can be more comfortable, because every month for 12 months, right, $20,000 coming in, I can just let that money come in. Instead of reinvesting, I can just let it sit into the portfolio, and I can go, especially into Robinhood, I can adjust the amount of money I borrow, right? So I can adjust the amount of money I borrow from Robinhood. In essence, will cut down the margins every single month, right? Because I only got to pay her tuition once a year, so I can pay the first semester half of the 12,000+ in one semester, and then the next semester I pay the other 12,000+, right? And whatever stuff she get between that, and that allows a buffer for me to pay down the margins. So once I get to 200,000 or $20,000 a month in this portfolio, I can start working on paying down the margin, because that's the goal of this portfolio, right? To get into that product, to get into that. So getting this to 20, getting the other portfolio to 40. When I get to 40 in the Fidelity portfolio, then guess where the attention goes? The attention leaves my Fidelity account, right? As I'm working on getting that to $40,000 a month. I'm working on getting this to $40,000 a month. So when we get to 40, I'm not going to stop. I'm going to continue to reinvest the portfolio as we grow the other account to 20. The goal is to get to 60 and to 100, but 60 is the goal. But in my mind, 100 is the goal. It's the ultimate goal. Because once I get to $100,000 a month, I'm making over $1 million a year. That's life-changing, guys. This is not financial advice, but it's life-changing. If you put your mind and money into the right investment, it can change your life. And not only my life, it's going to change the people's life around me and the people that listen to me, that see what I'm doing, that is working. Guys, this strategy helped me become a millionaire within 6 months period. Now, I was a millionaire sooner, but I didn't know it because the account wasn't propagating their money properly until I transferred the money out of Charles Schwab into Fidelity. Then it populated. So I was a millionaire a long time ago, probably 5-6 months ago, but I had no idea because the account wasn't populating the money properly. Okay? But that's beside the point. The point is, it is possible to get to the next level. And being a millionaire doesn't mean you have $1 million sitting in the bank. I have $1 million worth of investments. Okay? Now, they can be their real estate and their stock investments, portfolio, my stock portfolio. Okay? So that's how you combine those. I use tools that I've shown you guys before. Like I said, when we get to 2 million, we'll talk about that. It could be sooner or later. I have no idea. It could be next year. It could be this year. I'm pushing for this year because the sooner I get to 1, in all actuality, your net worth double every 7 years. So if I can double my net worth from 1 this year, next year to 2, and then get into 3 and 4, I probably could do that in the following year. So by the time I get to the 7th year, I would have done it 10 times over. Because I'm working towards it. That's why they say the rich get richer and the poor get poorer, because we make money, we make investments so we can buy things. Rich people make investments so they can generate income for the future, not just for today. But when you're poor, you only think about eating today. You're hungry. Okay, I'm hungry. What am I going to eat? What can I afford to buy? But when you're not worried about what can you afford to buy, now you worry about, damn, what am I going to eat? Where am I going to go to eat? Because you have so many options. I would rather have a lot of options than worry about what I'm going to eat. You know what? I can say, you know what? I'm going to have some Costa Rican food. Well, we're going to go to a Costa Rican restaurant? No. Why don't we just go to Costa Rica? Huh? What are you talking about, Edwin? No, we're going to go to Costa Rica. So we're going to spend whatever it is, depending on how many people it is, $3,000 or $4,000 to fly to Costa Rica, have Costa Rican food, spend a couple of days there, and come back. But for an ordinary person, that sounds crazy. That's ludicrous. But when you build yourself together, that you're generating worth, right? And that trip to go eat that food, it's a business expense, so you can write it off if you do everything properly. Guys, building worth, I'm telling you, I have not had so much fun than doing this. Okay, it's boring, it's not exciting, yes, but I have so much fun doing it because I can see it. And with these tools, right, I can see, almost like seeing the future, where I'm going to be if I'm continuing to do this consistently and stay on the winning end, right? I just got to win 80% of the time or 90% of the time. Once it's above 50% of the time, I'm good. But in this case, I'm winning more than I'm losing. Okay, yeah, we'll pick some bad positions that's going to flap or not going to generate. Guess what? We sell them and go to the next one, because this is a business. It's not an emotional attachment to me. Yes, I get upset if something don't go this way it's supposed to go, but it's not an emotional attachment, right? This is a calculated attachment to generate worth for the future. Guys, so we go back to the summary. You see right here now, we are at 40K because the month just started. As the dividend, now I'm not talking about this position, right? We working our way up to 40 here. But if we go to the summary, right, across the board, we over 40K, I guess. Yes, we over 40K. 41,000 across the board. That is amazing. If so, we at 40K a month. The gap is $20,000. If this calculation is correct, estimate is correct, and we have $41,000, that means we're $19,000 away from meeting our first goal. Do you think we can do that in 6 months? We have a consistent investing. Now, guys, that's the big play coming in, because I'm pulling money out of here. I'm not reinvesting all the money back into Fidelity, right, or Robinhood. I'm putting money into Charles Schwab. I can do fractional share in Charles Schwab. You have to buy 4 shares, all of the money. So if I got $5 and I need to buy Missy for $20-something, I can't. I have to sit down until I can get it at $20-something to buy it. So what if you starting off, you need Robinhood, Fidelity, a company that allow you to do fractional share. Charles Schwab is not it for you. When you have money to where you can buy 4 shares, you can throw $3,000 or $4,000 in your account every week, then it's great, because you're not worried about fractional share. You're just buying the full share and waiting for your dividend to come in. Okay, guys, we at the point now where this portfolio, we still got $1,000 we can spend. Okay, we have 500 already, and we only have $6,000 in the portfolio. Our estimate is at $500 with a $6,000 portfolio. So by the time we get to 10 grand, I know we're gonna have $1,000 a month coming in this portfolio. And I'm not using the money now. My card note is coming from Fidelity, because I moved all the money from the account before that I was paying the card note to Fidelity. So my card note money and the extra money I'm pulling from Fidelity, putting it into my Charles Schwab account, and then move the difference into this account. So every time I move $3,000 or $4,000, I want to put in $1,000 to pay car payment, right? And the other $3 going in here. So every month, I'm going to be throwing $3,000 to $4,000 into this account. And this account is barely a month old, and we already got $6,000 in there. Okay, and I still got another $1,000 to spend when the market opened on Monday. So if it opened red on Monday, guess what? We're going on a shopping spree. We're buying more what we already have, and I need to add my other core positions to this. So by the time I'm done with this portfolio, it's going to have maybe 30, 40, maybe 50 positions in there or more, right? Because my lifestyle, as I pay down my debt, and once I get this portfolio to where it's generating over $1,000, $2,000 a month, then I'm just let it do its thing by itself. Now, the other goal is to pay down. I'm in my condo in Colombia, right? I pay cash for this. I took a loan in the U.S. and paid cash for this. I had 2 loans, $150,000 loan. One is at 30 something, the other one is like 80 something. So now that we're generating this kind of income, we got to pay these loans off. So we got to tackle, because it's the big sum of money. One, I'm paying almost combined for these 2 loans. How much? 11 something. And the one is 2,000 something a month. So over $3,000 a month that I'm paying for these 2 loans, right? So that my expenses in the U.S. is high because of the loans and the credit cards. But the credit cards, I use them because I use them. I get points. I get money back from them. But the loans are just in the property. While I'm not here, it's on Airbnb. It generates a little bit of income, yes, but it's not enough. Okay, guys. So you see how I'm doing my Robinhood method. I'm moving stuff around, moving money around from one account to the other. And once I get to the point where this is doing what it needs to do, then I just let it continue to build itself. Right? $250, $300 a month, reinvesting every month, every week. No, sorry, not month, every week. Because what? I don't have to say, oh, I need to keep $2,000 in the account. I need to keep $5,000 in the account because I got to worry about margin call. No. I'm just going to be reinvesting. Reinvesting. That's it, reinvesting. Until it gets to where it needs to get to. Now, until I've been thinking about just not working now every day. The more, even though my job, I have a great job, I got a great boss, I have a lot of time. I don't, the job is not hard. It's easy. It's just mental. So maybe I work another couple of years because I spend more time now doing YouTube, doing these videos for you guys. I probably spend more time making these videos and doing the research before I make the videos sometimes than I do in my job every day. So if I'm doing that, I might as well, I don't make no money on YouTube, maybe $50 a month or whatever, but I'm not doing YouTube for income. I already make enough money on my job and in the market, as you guys see every day. Okay, I reinvest in the money so the portfolio goes bigger and bigger and bigger until it gets to the point where I feel comfortable. Then I pay down the dividends, and of course, as we pay down the dividend, we're still reinvesting into our core position. So it's a win-win position. And for the naysayers who have that negative mindset, thinking, "Oh yeah, is he gonna lose all his money?" You're gonna be waiting for a long time because you're not God, I'm not God, but I know what I'm doing, and it works for me so far. And we had a few down bad days in the market, and we handled that, we managed that, and we're doing better to prepare for that. So guys, invest in your future. Don't quit. Don't stop. Okay, like MC Hammer says, too legit to quit. So we're not gonna quit. Okay, you see guys, $456,000 annual. This is just the first month just finished. So I can still say, you know what, yeah, it's what, like I told you guys, it's for this year it's 400, right? Even though it's just 450, but that's for the next 12 months. So we can say from February to February next year, we generated $456,000. Okay, and then we work on this month to build it, right? If we're gonna get this thing past 50,000 plus for the next couple of months, if we can get to 500,000 in income, that's for the next month. Okay, guys. So don't let anybody mess up your joy, guys. Remember to join the Discord, and don't just want to join the Discord and sit there. Okay, join the Discord, talk to people in the Discord. I'm trying to build this community to where we're not just talking about how bad our portfolio is, but an actual community, guys, to where we feel comfortable in sharing ideas so we can grow. Because everybody have different strategies. Some people do options on their own. For one, I don't have time for that, so that's why I let these guys do my option for me. And when they're not doing it right, I cut the tie with that positions, and we go to the next one. Okay, guys, like, share the content. Okay, remember to leave comments, and likes is very important because the likes get to people who are allowed to see what we're doing. And if they don't get the likes, this thing doesn't continue to go on. Okay, guys. So remember, as always, I'm your humble host. Okay, Edwin Ford, the Dividend Passport Bro. Okay, right now hanging out in Cartagena and Colombia. I have family in town, so of course I have to manage and move stuff around, to make sure they have a good time. And they've been here for 3 or 4 days, and they're already talking about coming back, and they still got another 4 days to go. So we're gonna see how they're gonna go. And I'm spending money, of course. When you got people in town, you're trying to make sure they're having fun. I'm spending extra money that I don't need to be spending right now because I'm trying to get somewhere. Okay, guys, I love you. Welcome new subscribers. Have a great what day it is? Saturday, and we'll do. Is it Saturday or Sunday? Let me see. Did I tell you how bad it is? Sunday. It's already Sunday. I gotta go back to work tomorrow. God damn. Okay. Have a great Sunday, guys. I forgot I'm doing the Sunday talk video, right? Talk to you guys later. Bye.